Alrighty, traders, let's go ahead and get started with our weekly outlook for the first week of 2018. Thank you guys for joining us today. I want to wish you guys all a very happy new year. I hope you guys had some good holidays getting to spend it with your loved ones. And I hope you guys have some goals set and are ready to crush 2018. If you guys are joining for the first time, I see a couple new faces, a lot of familiar faces as well. My name is David Schinkel. I'm the CEO and founder of Positive Traders, and I run this weekly Outlook webinar for free just about every single Sunday for you guys to give you guys my outlook, my view on the markets for the upcoming week. So this is, of course, not Sunday like our normal webinar. Markets have been closed for the new year, so banks were closed all of yesterday. They just opened up a couple hours ago, so that is why we are doing our weekly outlook a little bit later than normal. So thank you guys. Before we get started and jump right into things like we normally do, I do just want to very quickly recap 2017. First of all, I would like to thank all of you guys for your unending support. Positive Traders has been running for almost 2 years straight now, providing lots of free value, lots of free content, as well as our premium group for people. And I really wouldn't have the determination and the drive to continue doing this if it wasn't for all of you guys' support. So I really appreciate you guys. I want to thank you guys for that. We have done, I think, well over 50 or 60 weekly Outlook webinars. There's 52 weeks in a year, so we've definitely done over 52 webinars, and they're all on our YouTube for you guys to go through. There's lots of free content out there for you. But like I posted in Telegram for you guys, my biggest tip, one of my biggest tips that I can give you guys going into 2018 is if you guys are looking to be your own trader. I'm sure most of you guys come on to these weekly Outlook webinars because you want to be your own trader, right? You want to be self-sustainable. You don't want to have to rely on me or anybody else in the markets. You want to be able to make your own money. You want to be able to understand the charts and just make your own money in the markets. So my biggest tip, like I posted in Telegram, is documentation, guys. I think it's Albert Einstein that said it. He said Einstein's definition of insanity is doing the same thing over and over again, expecting different results. So if you guys are doing the same thing week in and week out, loading your account with a couple $100s or a couple $1,000s, depending on your job, right? And you don't really understand what you're doing in the markets. You're just trying to hit a home run. You're trying to get lucky, but then you end up blowing your account. A month goes by, you save up some money, you do it again. That is literally insanity, guys. That's doing the same thing over and over again, expecting different results. So documentation is key. Make sure you guys keep a journal, a trading notebook. You guys keep something to take notes with, right? Every single time you take a trader, especially if you're in the premium group, if I give out a trade, right, I give out my analysis with each and every trade that we take. Write down that analysis. But like I said on my post in Telegram, that if you don't have a why, if you cannot take a pen and paper and write down, I am taking this buy because, or I am taking this sell on this pair because, and you can't write out a detailed why you're taking the trade, then why are you even taking the trade? So you need to have some cognitive reasoning behind the trades that you are placing, and documentation is key. So write down why you're entering a trade. And if it isn't a winning trade, write down why it wasn't a winning trade. Or even on your winning trades, write down why it was a winning trade so you can repeat those motions over and over and over and start to begin to build a profitable strategy. But other than that, guys, I'm very happy to announce that we are at about 400 members in Positive Traders, right? In our Telegram with free members, we have almost 1,800 members. We've been changing the lives of for the past year, a little bit over a year and a half now. In our premium group last year, 2017, we started with around a little bit over 100 premium members. We are now sitting at about 400 premium members. Everybody has built a really nice community inside of Positive Traders. So I'm just really, really thankful for all of you guys. And last thing is, guys, is stop following a million different groups, right? I'm not here to talk down on other groups, or not directly, I guess. I'm not going to name any names of any specific groups, but guys, don't be focusing on every single little group, right? If you follow 50 different groups. And I'm not saying every group out there is bad, right? It's a select few groups out there that do provide some good content, that actually have a track record, have some real results. But if you're just fiending for a trade, right? If every single Sunday when the market's open, you just have 20, 30 different groups that you follow and you just blindly take the first trade that somebody gives out, you shouldn't have to ask anybody why you're failing in the markets. You should know why you're failing in the markets. Because you're following too many people. You aren't following accredited people. So you need to ask people for track records, right? If you're following a group, you're being serious with the group, ask them for their track record. What sort of consistency do you have? Remember this, guys. Anybody can get lucky in the markets. Anybody can go and take $1,000, turn it to $10,000 in a month in the markets, right? Is it possible? Of course. People do it all the time. But is that consistently possible? No. So you need to be learning from people that are doing what you want to do. That's one of the biggest things that I learned in 2017 is surround yourself with people that are doing what you want to do, right? Don't follow people that are selling what you want to do or making what you want to do sound good. Follow people that are actually living and doing what you are wanting to do. Most people that want to be full-time traders want to be able to travel the world, want to have time and financial freedom. If you guys follow me on social media, you follow me through Facebook, you follow me through Instagram, you guys know that I've been traveling the world the past 6 months. Right now I'm currently living in Australia, 7,000 miles away from home for the next couple months, networking, building out here. But this year I'm going to be traveling to Asia. I'm going to be going to Europe. I'm going to be going to South America, going to be traveling to Canada. So you guys will see that my lifestyle reflects what I teach. So, don't be following somebody that's, living in their mom's basement doing something. Make sure you guys are following people that actually have some proof in the pudding, and then also a track record, right? That's the biggest thing, is having a consistent verified track record, right? Anybody can go. If you guys don't know that we have a MyFX book, you can go right to our MyFX book. It's right on our website. I'll just quickly pull it up for you guys. You can go on our website and you can pull up our double verified MyFX book. So you can see right here, boom, verified. This is what you're looking for, guys, is verified, okay? Track record verified, trading privileges verified. You can see the year of 2017, we closed 40%, right? Gained 40%. We started March 1st of 2017 on our trade copier based on the signals that we give out in the trade copier group that officially began March 1st, 2017. That is a 40% gain in 1 year. So you need to be following from people that have these verified track records, guys, okay? So that's really the biggest thing. I just want to give you guys an update of where Positive Traders is. Very excited for the next upcoming years. I have a very long-term vision, a long-term plan over the next 10 to 15, even 20 years with Positive Traders. So if you guys are on board now, you guys are pioneers to something that is, very long-term, something that's very special. So let's go ahead and jump into the markets, guys. There are two pairs that I am specifically interested in trading this week. But first, let me start off with the economic calendar. Of course, we talked about this webinar, this weekly webinar being held on today, on Tuesday, or if you're in Australia, it is Wednesday the 3rd. Most of you guys are probably still on January the 2nd. So it's Tuesday for most of you guys. Even there are still some banks closed today. We can see New Zealand banks closed, Japan banks closed, and Swiss banks closed today. So, but we do have U.S. banks open. We do have Canadian banks open. We do have Australian banks open. So lots of banks are open today, creating a little bit of allowing a little bit of liquidity in the markets. The rest of the market is pretty light, although Friday we do have our infamous non-farm payrolls. If you guys are part of Positive Traders, you guys are a paid member of Positive Traders, we do a webinar 4 times a week, a daily live webinar, excluding the weekly outlook 4 times a week. So I will be speaking a little bit more on NFP on those private webinars for you guys as we get closer to non-farm payrolls. But let's go ahead and jump into things. And then other than that, guys, there's not a whole lot. We have some ADP non-farm, which we always get the Wednesday before NFP. We have some crude oil inventories, pretty common, very more recently for the US dollar. There's some other high impact news, CPI flash estimate for the euro as well. That is a year over year reading, so that could be create a little bit of volatility for the euro come Friday as well. But main focus is the Friday news with non-farm payrolls, which again, we'll talk about on the private webinars as the week progresses. But let's start with the dollar index, guys. and talk about my bias, my direction. Also, my disclaimer before we jump into things, guys, please do not take any of this as financial advice. I'm not telling any of you guys to specifically buy or sell anything. This is just purely educational. This is just my viewpoint, my opinion on the markets. If you guys go and look at my track record, my portfolio, I have about a 70% win rate in the markets, a little bit higher than that, but that being said, losses are imminent. You have to understand, guys, that losses are imminent in the markets. One thing I do want to touch on also, if you guys are following people or groups that count pips, right? They advertise, okay, we're going to make 100 pips this week, or we're going to make 500 pips this week. That is a big red flag of an amateur trader, guys. Because think about it this way. You can make the same amount of money on 100 pips as you do 500 pips. It depends on the lot size that you are trading, the percentage at risk that you have on each trade. So somebody can tell me all day long that they made $1,000 this week in the markets. I don't care if they made 1,000 pips in the markets, because it depends on that lot size. It depends on the percentage at risk, right? If they had a 0.5% risk for a 1% gain, or they had a 5% risk for a 10% gain, it's all relative to the percentage that you have at risk. So if you guys are following traders that count pips, that is a big red flag of somebody that is probably new to the markets. They don't probably have a whole lot of experience in the markets. It's okay to count pips. It's okay to describe and write out how many pips you caught, but it's more important to focus on the percentage, right? When you have a broker, if you were to go invest in stocks, right, you're going to go to Merrill Lynch, you're going to go to I don't know, you guys know, depending on where you live, big stock funds. You go to somebody to manage your money. You aren't going to ask them how many pips are they going to make you this week, how many pips are they going to make you this month, right? You're going to talk about percentage gain, percentage loss, percentage at risk on a yearly, bi-yearly basis. Okay, so Forex is long term. But looking at the dollar index for this week, we have seen a pretty significant weakening on the dollar. Sentiment towards the dollar has been pretty negative recently. We've seen that as a reflection in the markets. We've seen the dollar, drop quite a bit. So we have talked about, and this is actually following our analysis of what we talked about. If you guys have been following our weekly webinars for the past couple of weeks, we know that price, you guys know that we had talked about price consolidating in this range in between the 94 level and then in the 93.2 level for quite a bit. And we talked about, depending on which way it breaks out, if it breaks out to the top side, it's probably going to continue moving up. If it breaks out to the downside, it's probably going to continue moving lower. And we did see a break to the downside and it moving lower. So this is following our overall analysis and bias in the markets for a break to directional bias. So that being said, I think that more weakening in the dollar could be expected. I think that, okay, so I do want to point out also our yearly lows. This is our yearly lows. We aren't too far off of our 2017 lows. Okay, so right around the 91 level marks off 2017's lows, and we're getting very close to that at the beginning of 2018. So I would be a little bit interested to see what happens around this area. My preference is right now is kind of sit on the sidelines and wait to see what happens in the markets. I'm not in any rush to jump into any trading right away. I would like to see some confirmation on the dollar index before looking to trade things like Euro USD, USD Swiss franc, gold even, which we'll talk about. I think that there's a little bit better opportunity on things like pound yen, which we'll be looking at in just a moment, USD CAD, which we'll also be looking at in just a moment. But I'd be kind of interested to see what happens around this black circle, to see if we break the previous year's lows. If that does happen, then we're probably going to see some significant weakening in the dollar, at least short term. So I'm on the sidelines with the dollar index. Gold has made one of the biggest rallies that we've seen on gold in the past 6 months. It has gone all the way from around the 1230 level up to it's hovering around the 1320, 1330 level. It's almost gone up $100 per ounce in just the past couple of weeks. I still think we could continue rallying up towards the 1350 level, especially if the dollar continues to weaken. If you guys are not familiar with the correlations in the markets, you should definitely know, or at least write this down in your trading journal and understand that a weaker dollar is generally a stronger gold. So right now we're seeing the dollar index drop. We're seeing the sentiment around the dollar failing a little bit and becoming weaker. So we are seeing strengthening in gold. What this is big money in the markets, guys. This is banks, hedge funds, people that manage or even control or even trade their own billions and billions, tens of billions, hundreds of billions of dollars. And let me just tell you guys this. If you guys think that there aren't people in this world that have hundreds of billions of dollars, you guys are definitely wrong. There are actually trillionaires on this planet. They are not documented, right? A lot of people think Bill Gates, Jeff Bezos, the people, Warren Buffett, the people that are on the Forbes list, those people that are documented richest people are the richest people in the world. No, that is not true. Those people are, fish compared to some of the whales and sharks that are that are undocumented, that move trillions of dollars, billions of hundreds of billions of dollars. So they have a lot of money, but not as much as some people that are undocumented. So those types of people that are moving that kind of money are basically selling the dollar, and they are looking for safer investments like gold. Gold has always been known as a safe haven investment. So that's what we're seeing happen with gold right now from a fundamental standpoint, is a lot of uneasy uncertainty in the markets. So investors, big investors, the market makers are looking at safer havens like gold. So makes sense why we're seeing gold move up. Not interested in really trading gold right now, though, until I have a better understanding of what the dollar is doing. Same thing with Euro USD. Again, we're going to get to the pairs that I am a little bit more interested in trading, but we're going to go pretty quickly through Euro USD, USD Swiss franc, some of the pound pairs. Euro USD does not look super appealing. It's getting very close to, again, the opposite of the dollar index, right? The dollar index is getting very close to last year's lows. So Euro USD is getting very close to last year's highs, which we saw back in early November. So we're very, very close to that, actually. We actually almost retested that just the past 24 hours or so. So we'll look to see what happens. But if we do see this resistance broken, then we're probably going to see the dollar index move quite a bit higher. We'll actually just so you guys can see Euro USD from a very scaled out standpoint. We had a very, very big rally throughout 2017. So this actually marks off the start of 2017, and this marks off the end of 2017. So we saw a very bullish year for Euro USD. Over quarter 2 and quarter 3 of 2017, we saw a very, very strong rally on Euro USD. And quarter 4 of 2017, we saw pretty much a little bit of consolidation, a big tapering off. So if we break this resistance area, if we break these yearly, the previous year's highs, we could see a very, very strong rally in Euro USD. So very important to watch Euro USD. I think that there is going to be a possible opportunity to take some buys on Euro USD. Let's see. Sheldon says only a sucker buys or sells the break of a yearly high or low. Don't do it. So we'll see what happens, Sheldon. Definitely interested to see what happens. But I think price action is giving us some opportunities to possibly get long on. Of course, we aren't going to look to buy right when it breaks, right? It all is based on price action. So if we break it, obviously, we're going to want to see what happens in the following days, the next 7 to 14 days afterwards. We'll look to see if it falls back down to see if that is a fake move. But if we see some consolidation, we see some accumulation of orders, then we would look to take a buy. So let's go ahead and move on to USD Swiss franc. USD Swiss franc is moving lower as well. We've been watching this trend line, and we've seen this trend line be respected quite a bit. We've seen some very strong moves in the markets going into 2018. I think there is some more downside on USD Swiss franc also. We may get a little bit of a pullback first. We may move up a little bit higher before seeing lower, but overall, from a technical standpoint, it does look like the dollar is wanting to weaken a little bit more. So Euro USD moving higher, USD Swiss franc moving lower. It makes sense. We definitely could see this happen in the markets. Pound dollar, not very interested in trading right now. We've been very on the sidelines with pound dollar. However, our overall bias has been up, right? We've been in a very long-term uptrend on pound yen. Since, again, the beginning of 2017 to the end of 2018, we saw a very bullish pound dollar, just like we saw a very bullish euro dollar. So we may be looking at higher highs coming in the very near future for pound dollar. Pound yen. Now, pound yen does look a little bit better for trading. This is a trade. What we have outlined on the markets right now is a trade that we placed in the premium group at the end of last week. Had very, very minimal drawdown we took the trade somewhere around this area is where we placed our trade. Very, very minimal drawdown for very large profit. So that also reflected on our trade copier. If you guys looked at my FX book, we did take this trade, closed with some profits, and before the new year, before the markets closed for the holidays, the new year, and we made some very nice profits. But we had a very good risk reward on this trade, one for a 3.59 risk reward ratio. So we risked 2% to make a little bit over 7% on this trade. I would be watching to see if these highs are broken, and I would be looking at taking some potential longs on pound yen. Has been moving pretty nicely. I think we're going to see a very big rally this year with pound yen as well as dollar yen. I think we're going to see some big rallies to the upside on both of these pairs. I think pound yen moving into the first quarter, before the first quarter of 2018 is finished, I think that we could see pound yen somewhere around this area. So I'm going to be watching very closely to see what happens. But there is some very, very nice price action to the upside on pound yen. Dollar yen, not as much. I'm not super interested in trading dollar yen right now until it gets up towards these previous highs, which also marks off our multi-year, or actually 2017 high in year. I'm sorry, 2017 yearly high and low fibbed out. So I want to very quickly show you guys that. Here's our swing from the top of 2017 to the bottom of 2017. And we can see our 61.8% retracement level. So what I'm looking for long-term is I'm looking for price to move up towards the 61.8% retracement level. It may not go straight up, right? It may not go straight up this week. We might see this drop even further, maybe come down and make a double bottom in this area before moving up higher. But at some point, if and when price moves up to this area, I'll be looking for a break and then a bounce and then moving up higher. But I think a rally is due for both of these pairs at some point. But upon dollar weakness right now, I wouldn't be surprised if we see this pair move lower. We see Euro USD move higher, just overall sentiment for a weaker dollar right now. AUD USD and NZD USD, both of these pairs I'm not super interested in trading. We may be getting some selling opportunities on these pairs. They haven't had the strongest correlation to, or they have had a pretty strong correlation to a weaker dollar. But overall, from a technical standpoint, I think they could go a little bit higher. We have these trend lines in this area, and then we could be looking for a sell somewhere in this area. Again, I think it has a lot to do with what the dollar index does. If we see the dollar continue to weaken, then more than likely we're going to see both of these pairs continue to rally higher. They've made pretty strong moves to the upside over the past couple of weeks. But overall, I'm not very interested in trading these pairs. Dollar index is kind of finding a little bit of a top, but I wouldn't necessarily trust this top. I think that until we get if we get a really, really big red candle, then we may look at selling New Zealand dollar, US dollar. But as of right now, just because it looks like it could be coming to a reversal, it looks like it could be reversing at this area, especially finding some resistance at like the 200 daily moving average. And that is a simple moving average in SMA for you guys. For those of you guys that are curious, I wouldn't be too interested in just selling this pair right now. But finally, USD CAD. I do want to look at USD CAD. USD CAD created a nice bearish engulfing candle, and it has broken this range. And from a weekly standpoint, we may be resuming this long-term downtrend that we had on USD CAD last year. So we actually marked off, if you guys have been following these weekly webinars, we've had this extension, this 161.8 extension on our charts for quite a while. Somewhere around, it was around this rally where we found this extension. I think long-term this year, we could find around this area. Oil, if you guys have been following oil, the fundamentals of oil, there is quite a bit of demand and talks about cutting oil production a little bit. So cutting the supply of oil is obviously going to increase the demand for oil, which should overall appreciate oil long term, which should cause some strengthening in the Canadian dollar. So we should see some weakness in USD CAD this week. At least that's what I think we'll see. And I did, if you guys were on at the very beginning of this webinar, I had this little trade idea outlined. So for those of you guys that are in the premium group, this could potentially be a signal that is given out. So if you guys are watching this in a part of the free group, just some free value, free nuggets for you. We may be, I think, a sell somewhere around the one if it breaks the low. So a sell stop around 124.98 doesn't look too terrible. With a very small stop loss, about 24 pips around 125.22. And a nice 1 to 2 risk reward at about 124.50. I think we also get a little bit of confluence with the extension levels. Let's just take a look real quick. Not perfect confluence with our extension levels, but we'll look to see what happens. Let's check this extension as well. Overall, though, we're looking for that 1 to 2 risk to reward. So we have a one extension level of 361.8%, but overall we do have a nice little bear flag on the 1 hour. Just a little opportunity to make some quick money this week, guys. I think it doesn't look like the worst trade, and I think it gives us some good trading opportunity. We have had a pretty big decline in USD CAD, so that's the only thing that might make me a little bit apprehensive about taking this trade, is selling so low. But again, everything has to do with risk to reward. If we get a good risk to reward on our trades, then that's really all that matters. We don't have to focus on being accurate. It's okay to take losses as long as our risk to reward overall is strong. Let's see, Sheldon, you asked any timing on that oiled matter. Maybe Sheldon, if you could clarify a little bit what you're asking on. Are you talking about on timing of when they are looking at constricting supply on oil? It's just in the talks right now, I think a little bit closer to our OPEC meetings. I need to look up exactly when the first OPEC meeting for the year is. I don't think it's too far off. I think it's either in the next upcoming weeks, or if it is the first or second week of February. We should see an OPEC meeting where they're going to actually be outlining, giving kind of like a statement with some outlines of when they are talking about cutting oil supply or constricting oil supply. But I think that's going to definitely be something like a buy the rumor, sell the news type of thing. So I think the big people, the market makers, are going to be looking at taking these moves now for strengthening CAD, strengthening oil. And then us retail traders, they're going to want to, sell off or do the opposite when that time comes. So I think now is definitely the time to act on this strengthening CAD. And overall, again, just from a zoomed out, scaled out standpoint, I think that looks like this long-term USD CAD downtrend seems to be resuming. I think we definitely got some good confirmation with last week's weekly candle closing below this consolidation. We had some major consolidation for what's that, 3, 6, 9 weeks. So over 2 months, we just had some sideways moves on USD CAD, and we're breaking out of that consolidation. So I think that has been a big accumulation of orders looking for some downside potential. So watching for USD CAD, guys, watching pound yen as well. Those are really the only two pairs that I'm very interested in to start the week off. That may change as price action changes throughout the week, but I'll leave you guys with that. If you guys are in the premium group, we do have a premium webinar today in about 2.5 hours at 11 p.m. Eastern Standard Time. We're going to be going over a little bit more in depth this USD CAD trade and possibly looking at some entries, some live trades on USD CAD. If you guys have been in, if you guys are in the premium group as well, you guys know we held a cryptocurrency webinar. As you guys know, we talked about this in the premium webinar a little bit, that it's been hard to ignore crypto the past couple months. I don't claim to be any type of crypto guru. I probably never will, but it's hard to invest. You guys know us as traders, right? We seek out volatility, and there's a lot of volatility in the cryptocurrency markets right now. So there is one coin specifically, Tron, that I told you guys, I showed you guys my portfolio, have about 6-7K invested, 6-7K USD invested into that coin right now. We bought in. I made the recommendation in the premium group for you guys to possibly, if you wanted to, based on the education, to buy around 3 or 4 cents. It's around 7 or 8 cents right now. So those of you guys that did invest in that coin, you have doubled your money in less than a week, actually, on on that coin. I think it's a long-term good hold. I think over the next year, we could see $1 hit on Tron. So those of you guys that are listening for the first time, you guys are in the free group. You guys have no idea what I'm talking about. I obviously have been dropping a little bit of nuggets here and there on what I invest in, right? I've been giving you guys my setups, what I have been trading in on in the cryptocurrency markets. Just a little bit here and there, right? I'm not super invested in Bitcoin. I had quite a bit of Ethereum that I sold off at its previous highs and actually just made some new highs. But I've been looking at a little bit different coins, looking at the technology, the team behind it. And so there's some things out there like Tron, Stellar Lumens, a couple other good ones that we're looking at. You like Tron as well. Some of you guys also that were on the premium group, I had recommended Stellar Lumens as well. That was around 19-20 cents when we did the cryptocurrency webinar. Right now it is sitting around in between 50 and 60 cents. So that as well, you doubled your money on that. So lots of good tidbits. So that's another thing throughout 2018. That's something new that I'm going to be doing as well. I'm going to be giving out my setups to my premium members, telling you guys exactly what coins I have. I was very transparent. I showed you guys my exact portfolios, showed you how many coins I had. So I'm very transparent with you guys. You know, I want everybody to be making the money the same way I'm making money. So it's just about diversifying, seeking out volatility, and there's a lot of volatility in cryptocurrency right now. So if you haven't already looked at Tron, I would highly recommend looking at the team behind Tron, looking at the technology behind Tron. I'm not invested in it just because it's a cheap coin, just because I think it's gonna, just because I feel like it's gonna go up. There is a lot of sentiment, and not just sentiment, but there's a lot of like technicals and fundamentals behind Tron. The person running Tron, his name is Justin Sun. He is the protege of Alibaba, or of Jack Ma, who owns Alibaba. There's also a couple members from the Alibaba team that are working on Tron as well. It's also used in a company called Obike, the technology for the currency that runs Obike. It's a $3 billion company that is based in Singapore. They are based on the Tron network as well. So lots of good things behind Tron. It's not just because I feel like it's going to go up. There's a lot of fundamentals and specific reasoning behind. So I'd recommend taking a look at that. I know I don't really talk about cryptocurrency too much. And again, guys, I do not claim at being a crypto guru. Forex is my bread and butter. It always will be. I've put blood, sweat, and tears, many years of that into Forex. So Forex is going absolutely nowhere. Still makes up about 80%, actually more than 80% of my investing portfolio. But again, like I said, us as traders, we seek out volatility. We need to go where the volatility is. So again, it's been holidays. It's been kind of slow for the Forex markets, kind of looking to see what price action does. So we're diversifying a little bit. We move into a couple different things. But again, I take my Tron profits, I take my cryptocurrency profits, and I'm going to be putting that always back into my Forex trading account, because Forex, again, is my bread and butter. So I definitely don't claim to be any crypto guru, but it's good to be educated on this stuff. It's good to be educated on the volatility and, make some good calculated long-term investments. So that's my spiel for today, guys. That's our outlook for the week. If you guys are a premium member, you guys know on Thursday on our final private webinar, I'm going to be giving out $100 to 3 different people for leaving reviews on our Facebook page. So if you're a premium member, don't forget to go ahead and leave your thoughtful review on our Facebook page, and you could be one of those 3 people. I'll be picking that winner live on the webinar. Other than that, if you are a free member, you guys can join me again next week on our free weekly outlook. I'll be giving my outlook again. I'm going to be going through this week also, and I'm going to be going through all of my outlooks for 2017 and see how many of my directional biases were correct and how many were not correct. But I have a feeling it's somewhere around the 60 or 70% range of how many weekly outlooks were correct. So, it's definitely can help give you an edge on the markets by attending these weekly webinars. So let's go, Sheldon. You want $100? You just got to be in the premium group and leave a review. I am going to be doing a giveaway in Telegram as well. So it is going to be something like review based. If you guys go and leave a thoughtful review of how Positive Traders has helped you, or how you found value through Positive Traders in the past, however long you've been a part of Positive Traders, you leave that on our Facebook page, guys. Our Facebook page. You leave a review on there. Going to be giving away some money. Probably going to pick like 3 or 4 people to give $50 away, or something good, maybe some free membership, something like that, to some Telegram members. I just had a lot of focus on our paid group the past week or so as the year closed, making sure I'm giving away some people some money. So Last weekly outlook helped a lot with pound yen. That's awesome. All right, guys, I am out of here. Appreciate you guys. Sheldon, thank you for always holding it down in the Telegram chat room. Appreciate you, my man. Other than that, take it easy, guys. If you have any questions, please feel free to reach out to me. I always try to find some time to answer your questions, probably Facebook is the best way, but Telegram, Instagram, Slack, however you want to get a hold of me is good, but Facebook is probably the best way to get a hold of me. So I appreciate you guys' time. Have a wonderful week. Remember to use that good risk management, good risk to reward on your trades, and let's focus on crushing the markets 2018, guys. Appreciate you guys. Have a good week, guys. Take it easy.